Hello, today's September 23rd, 2017. Let's go over our calls. Looking on Friday for a day with an early low and a late high. We got that. Monday, I hope to see a pattern with an early high. Tuesday, a pattern with an early low. Looked for the most likely thing to be a gap at Friday's open with a quick move outside of Thursday's range. We got that. Next most likely we said was closing a little change, which we got. And then having a large move Monday, which I think we are going to have. We had a few MEJT targets. There was an optional target down here which printed. We had a required one up here. I said I'd be happier if that did not print because of major changes in trend. MEJT typically leaves a failed target. During the day, MEJT and the software marked this as a false move. Gives us a price target of 24.9775. That's my call, but I think we can go a bit further than that. This is a pattern which typically rallies all day long, closes over this high. That happened, but the timing leaves a lot to be desired. It wasn't until 20 minutes before the close that we overtook the high. That's a sign of weakness. We had a wall into the close. I think it's unlikely that professionals are going to start buying with abandon only when liquidity dries up, and it's not good that we had this big drop at the end because it means after rallying all day long we couldn't close. That's the blue line. Could not close over any of the lows of the prior consolidation. So the all-day rally didn't really accomplish anything. We had a time since August of September 24th as a potential change in trend. That's a weekend. You don't trade on the weekend. Only way to make that to be a direct hit would be if Friday's close / Monday's open mark the change in trend. I think that's what's going to happen. I don't really have much luck using Fibonacci ratios for time, but if you take this low in May and this low in June, you can see how 38.2 and 61.8 and even 100 come pretty close. If not direct hits, 200% is right at Friday's close. So we have a few basic assumptions here. One is that the first move to the FOMC announcement was a drop, so the next large move should be down. We're also assuming that the high of this leg is in. I think the wave count tells us what's going on. You have the all-time high. You have an ABC with C equal to A. You then have a consolidation for an ABC. C and A have a Fibonacci relationship, and this price is a Fibonacci target of the highs of the prior consolidation. It's a very logical place for prices to stop moving up. If this move is a false move, as I believe, the best way to prove it would be if we reversed it immediately at the open. If we're going to have the large move Monday, I think we will, and if this is as false a move as I believe it is, we should gap down at the open, ideally undercutting these lows. The price target I have for Monday is 24.9775. I think we're going to gap down at the open, and if the gap down undercuts these lows, it ought to be clear before the open, and I think that will happen. Then we should drop all day long. As always, gapping up sharply kills the call before the open. But I'm looking for this price, a gap down, undercut these lows, and an all-day drop, and that's today's call.